You know those home flipping shows on TV? If that's your idea of real estate, you might be in for a surprise. Turns out, professional investors play a completely different game. So today, we're going to distill the expert advice from Robert Kiyosaki's The Real Book of Real Estate into a professional's blueprint for building real wealth, not just chasing after quick cash.
And right off the bat, the book just challenges that whole amateur approach. This quote from Kiyosaki totally reframes the popular idea of flipping. See, it's not investing in the professional sense, it's speculating. You're basically making a high-risk bet that the market's going to go up in the short term. And as we all know, that bet, it doesn't always pay off.
So what it really comes down to is the mindset. The flipper, they're chasing a quick score. Buy low, sell high, and get out fast. But the professional investor, oh, they're playing the long game. They're not just trading houses. They are building a system, an engine, that's designed to generate sustainable, long-term wealth. It's really the difference between having a job and owning a business.
And that right there brings us to the first major shift in thinking you have to make. To really succeed like a pro, you've got to stop treating real estate like it's a hobby or some kind of side hustle. No, you have to start treating it like a sophisticated business. This is the absolute foundation of the entire professional blueprint. The core principle is this: run your investments like what Kiyosaki calls a B-quadrant business. Now, what does that mean? It just means it's a system-driven enterprise where you own the system, not just a job inside of it. You're applying fundamental business principles like strategy and leverage to your properties. The goal isn't for you to do all the work, but to build a system that works for you.
Okay, so how do you actually build this business? Well, it really comes down to these three pillars. First, you have to adopt that professional mindset we've been talking about. Second, you build a power team to actually run the system for you. And third, you absolutely have to master the numbers that tell you if your business is winning or losing. Let's break those down.
Once you've got the right mindset, it's time for the second pillar: building your team. Seriously, forget that idea of the lone wolf investor. Professional real estate is a team sport. Your team is the engine that's going to drive your business, and that frees you up from the day-to-day grind so you can focus on the big picture. You think that sounds impossible? Well, the book gives us an incredible example. One of the contributors makes over $100,000 a month from his real estate portfolio while spending only about 1 hour a week on it. I mean, come on, how is that even possible? It's all about the leverage you get from a great team.
Look, it's not magic. It's just smart management. A professional power team is made up of specialists: your broker, your attorney, your tax advisor, your property manager, and so on. They handle all the operations. They find the deals, they vet the tenants, they fix the leaks, they handle the paperwork, which allows you, the business owner, to focus on strategy and growth.
Okay, you've got the team in place. The engine is built. Now we need to know if it's running smoothly. This brings us to pillar number 3, mastering your numbers. See, a real business runs on data, not just gut feelings or emotions. Your financial statements are literally the dashboard of your real estate business.
This quote just says it all, doesn't it? You can have the best properties in the world and the best team, but if you don't actually understand the financial performance, you are flying completely blind. Knowing your numbers is the difference between hoping for a profit and actually engineering one.
And the single most important number of all is cash flow. It's not just about whether your bank account went up or down this month. True cash flow is the pure, unadulterated measure of a property's performance. It's the actual cash it puts in your pocket after every single expense is paid.
And this is where the pros really use numbers to their advantage. Just look at this example from the book. The net income is negative, a loss of over $6,000 for tax purposes. An amateur would probably panic, right? But look at the bottom line. There's a positive net cash increase. You actually made money. So how?
The secret is a little thing called depreciation. It's a non-cash expense that the government lets you deduct. This creates a paper loss for tax purposes, even while the property is spitting out real positive cash flow. This, right here, is the professional's edge, using the tax code completely legally as a tool to build wealth. So we've covered the team and the numbers. Now it's time for the final piece of the puzzle, the part where it all comes together. This is really the highest level concept from the book, the idea that wealth creation itself can be understood as a formula.
This quote just sets the stage perfectly. You know, just like physicists use equations to describe the universe, sophisticated investors use formulas to understand and create wealth. It's all about boiling down a massive, complex process into a simple, powerful expression.
And there it is, the formula for wealth. Now, I know at first glance it might look a little intimidating, but stick with me here. It's actually a beautifully simple summary of everything a professional investor does. Let's break it down, variable by variable.
First up, W. That's our goal, wealth. And not just money, but the freedom, the security, and the peace of mind that comes along with it.
Next, X stands for the exchange of energy that happens in every single transaction. It's about committing to a win-win deal, where you provide real value, which creates a natural flow of abundance right back to you.
O is for opportunity. This is your ability to spot the deals that are actually viable, the ones that make solid economic sense, not just some pie-in-the-sky dream.
T plus E stands for talent and equity. This is the killer combination of your team's skills and the capital, whether it's yours or other people's money, that actually activates the deal.
And finally, K represents speed over time. How efficiently and how quickly can you execute the plan? Because in the world of investing, trust me, speed is a massive advantage.
So how in the world are you supposed to remember all that? Well, the book gives us a simple little mnemonic. Just say it phonetically, XOTK. It kind of sounds like exotic. And hey, that's the goal, right? To achieve exotic wealth by mastering this formula.
But how do you even begin to use this formula? How do you get in the game in the first place? The book tells this fantastic story about playing marbles as a kid. To play, you needed at least one marble. They called it a taw. And without that one marble, you were just locked out. You couldn't play no matter how much you knew about the game. That first marble, that's your capital.
And that brings us to the final and maybe the most important question. Applying the business principles, building the team, mastering the numbers, it all has to start somewhere. It starts with getting that first piece of capital, that first marble, so you can get in the game. So what's your first marble? What's the first step you need to take to move from being on the sidelines to actually becoming a player?